The Chinese economy is trapped in debt and the domestic real estate market is plunging into crisis. The situation is very bad. The ratio of Chinese companies' debt to GDP at the end of 2021 was 159%. This is much more than the world index of 101% and the USA of 85%. The data also shows that as many as 58% of Chinese companies are seriously indebted, while globally this ratio is at 38%. In addition, nearly half of these companies are Chinese developers and companies related to the broadly understood construction and engineering sector. So how did China's problem grow and what is the current situation? We start with a short intro and we go then straight to the topic. So buyers of properties that were not completed on time refused to pay the mortgage installments. The problem affects as many as 25 provinces. Housing construction has practically stopped. Construction finish dates have been often exceeded by more than 12 months, and there is no living soul on construction sites. According to information from July 16th, the problem concerns as many as 286 residential projects. Each such project consists of thousands of apartments, and the value of these investments is estimated at $105 billion. Current data as of today are not known due to the intervention of the Chinese government, which is trying to block the flow of information. However, it can be safely assumed that the scale of the problem will only grow. According to some estimates, the number of people who decided not to pay mortgage installments may already be well over 1 million. On the other hand, we collide with the government's assurance that the whole situation is under control and that the citizens have nothing to worry about. The situation is so bizarre that some companies have hired actors to construction sites who pretended to be workers in order to simulate the progress of work. You cannot count on a visit from real employees, as many developers have been falling behind the salary payments for several months. Some married couples decided to divorce before withholding payments so that the other spouse would not end up on a blacklist of borrowers. Others, out of desperation, decide to live in tents in purchased, unfinished apartments. Is the problem serious? So maybe let's look at the numbers. The Chinese economy in June 2021 accounted for 19% of global GDP. Meanwhile, 30% of Chinese GDP is real estate sector. Given the scale of debt and mounting problems, it looks like a ticking delay bomb. For now, the Chinese government is trying to somehow extinguish this fire as it was in the past. But is it enough? Let's take a closer look at how the problems in the real estate market in China arose. It was mainly the system that formed this snowball itself that was at fault. The average Chinese smith bought a flat spending 30% as his own money for down payment, which went to the escrow account at the bank. And he borrowed the rest 70% in the form of a long-term loan, which he repaid in monthly installments. The developer received the 30% paid only when the work progress was at a certain stage. Only that local inspections of building supervision authorities approved documentation confirming the progress of construction works, sometimes even if there was no such documentation. Chinese regulations governing these issues are so vague that they allowed for a very free interpretation of when construction progress could be considered appropriate. So what did that mean in practice? Such approval allowed developers to use the funds from escrow accounts for further investments, which they were willing to use. As a result, the developer was able to buy more land, start new construction projects, and sell more unfinished apartments. And so, does this layout sound familiar? The first thing that comes to mind is the Ponzi scheme. It's just that this one is acted to the accompaniment of banks and the government. In addition, developers used for this purpose not only the client's capital, but also the financial leverage in the form of their own bank loans and international bond issuing, which blew up the bubble on the real estate market even more, and consequently implied a huge risk of these ventures. But who would care if the market in China had been red hot for years and prices were skyrocketing? And so over the past few years, property prices in Beijing and Shanghai have practically doubled, and throughout China, prices have risen by as much as 500% on average over the past 2 decades. So real estate prices in relation to earnings of residents in the 4 largest Chinese cities, i.e. the Beijing, Shanghai, Shenzhen and Guangdong, are the highest in the world. They are outstripping London, Tokyo, Paris and New York. So this applies to both the city centers and outlying districts. So due to the demographic boom and the very dynamic development of the economy, the demand was practically unlimited, and there were virtually no offers from a secondary market. So the more so because real estate is the second next to gold favorite asset for investing capital by the Chinese people. The average citizen therefore had a choice to buy a hole in the ground or not to buy at all. Developers took advantage of the opportunity and huge investments were still sold in the pre-sale offer. Problems began to emerge in the first half of 2021 when real estate sales in large cities began to plummet. And with such pattern, even a short downtime in sales was enough for some developers to start losing financial liquidity. And here a great example is the case of well-known Evergrande, the second largest developer in China, whose problems surfaced in 2021. The founder and president of Evergrande is Hui Kaiyan, who owns over 60% of the shares. In October 2021, his net worth was estimated at $8 billion according to the Bloomberg Billionaire Index. And this despite the fact that at the same time Evergrande was the most indebted company in the world and had trouble paying back $300 billion in loans. At that time, the company was carrying out over 1,300 investment projects, and the corps were just starting to fall out of the wardrobe. It is also worth adding that in March 2021, i.e. just before the first significant drop in real estate sales, Hui Kaiyan's asset amounted to nearly $28 billion. Today it is a modest $6 billion, and he from the top 50 fell to a 389th position in the ranking of the richest people in the world. In just a few months, Evergrande's history has seen interest defaults, bankruptcy risks, spikes in stock prices, trade freezes, and on top of that, Evergrande's home sales dropped 99% year-on-year in December. So in addition, at the beginning of January 2022, by the decision of the local authorities, the developer had to demolish 39 residential buildings in the Hainan province, for which he was given 10 days. Reason? The building permit was obtained illegally. And despite the problems and the fact that the Fitch rating agency declared Evergrande bankrupt in December 2021, the company still exists and the president still enjoys the support of the Chinese authorities, which of course is something to think about and shows how the local market works. After such an event, it could not be otherwise. Uncertainty among buyers grew stronger, which of course had further consequences. In May 2022, Sunak, the third largest developer in China, failed to pay interest on bonds on time and at the same time pointed to a dramatic change in the macro environment of the real estate sector since the second half of 2021. He also pointed out in his statement that, quote, sales continue to decline significantly while access to new financing is becoming more and more difficult as some developers face increasing liquidity problems, end of the quote. And it is not surprising because in March, Sunak saw contracted sales tumble by as much as whopping 53% compared to the March 2021, and in April by as much as 75%. So the situation has become tough, but there is no shortage of ideas for rescue. Some developers started to introduce barter transactions, accepting wheat, garlic and even watermelons as settlement. And so 500 grams of wheat have been valued at 30 cents, 500 grams of garlic at 74, and 500 grams of watermelon at $1.50. But okay, what if the demand for real estate is waning? So there was also a solution for this. On June 17th this year, an official letter was issued in Shandong province stating that any Chinese citizen with more cash savings and deciding not to purchase real estate would be called for a presumed non-ordinary government hearing, supposedly to have a nice chat with authorities, if you know what I mean. Of course, there is no doubt that such solutions, if any, can only help in the short term. And in the long run, we are dealing with a fire fighting with a gasoline canister. So the developers themselves quietly admit that they need a regular flow of advance on new projects to maintain the production machine and the sinking razor grasps. So mass withholding of payments for loan installments must also have consequences in the banking sector, especially affecting small and medium-sized institutions with the risk of losing liquidity. So far, no major disturbing signals are visible, but since the Chinese market is not very transparent, the Western world may learn about these problems when they are at an advanced stage. As if the problems were not enough, at the beginning of July this year, mass protests broke out in the Henan province, and since May, 400,000 customers have had problems accessing their savings, which were invested in the so-called rural banks. The scale of the problem is huge and concerns a total of $6 billion. Officially, according to the authorities, the disappearance of this money was the result of a complex crime in which a private financial group and bank employees jointly diverted funds from them. As it turned out, stolen funds are not guaranteed by the government because the funds have been invested in financial products. Protesters gathered in front of the local branch of Chinese Central Bank, accusing the authorities of Henan province of covering up the scandal as well as actively participating in its deepening. In response, in order to calm the situation, tanks rushed to the streets and the protesters were brutally suppressed. But let's get back to economics. As the Chinese economy returned to growth in the third quarter of 2020, worries about an annual decline in GDP seemed to be a thing of the past. In the second quarter of this year, GDP grew slightly, only by 0.4% on an annual basis. The sheer scale of the current growth of the Chinese economy is not the only problem. However, the slow growth rate was due to the restrictions introduced in Shanghai and Beijing due to new outbreaks of the most common disease, the name of which does not need to be mentioned. It can therefore be said that the reasons are analogous to those that led to the contraction of the economy in the first half of 2020. Let's add the crisis in the real estate market, which returns like a boomerang in China, but when in 2015-17 they managed to postpone the problem in time, now it seems less and less real. It is true that the restrictions have just been loosened, but will it take a long time before new ones come? It seems that China also has not yet said the last word on this subject. For example, the Chinese government does not currently place additional orders for liquefied natural gas, possibly assuming that the current zero-COVID policy and ensuing sanitary restrictions will keep demand low for an extended period of time. The conflict between the US and China is also becoming an increasing problem. On July 28, the presidents of both countries talked on the phone for over 2 hours. The subject, of course, was Taiwan. According to the US administration, Joe Biden told Xi Jinping that the US is opposed to unilateral attempts to change Taiwan's status. The Chinese president recalled that Beijing strongly opposed Taiwan's independence and possible interference by external forces. To this, he added that, quote, "Those who play with fire will only get burned. I hope the American side understands it clearly," end of the quote. Which was likely a reaction to the news that the USS Ronald Reagan aircraft carrier strike group had departed from the port of Singapore and is currently operating in the waters of the South China Sea. According to the official statement, the ship is carrying out the normal scheduled operation as part of the routine patrolling and supporting the free and open Indo-Pacific. Chinese forces did not stop at words and closed the Taiwan Strait and then launched rockets from a PHL-16 MLRS launcher into the sea as part of the military exercise. Not mentioning the current situation after Nancy Pelosi visit. And so economic problems, a pandemic, and the specter of an armed conflict with the world's first power are an extremely explosive mix that the whole world may not be prepared for.